right, well, hello, everyone. I am pleased to introduce Contango Ore's President and CEO, Rick van Nieuwenhuyse. Before we jump into the discussion, I want to remind you all that you can submit your questions at any time on the Q&A panel on the right-hand side of the screen, and we will get to them after the discussion. But without further ado, Rick, can you provide an update on the Mancho project and why the name changed from Peak Gold?
Sure, Dasha, good to see you again. Yeah, so just the name change on to Mancho, it's an Athabascan name, and after discussions with the Tetlin tribe, we decided to, in honor of and representing the tribe, to switch the name over to an Athabascan name. It's actually specifically an Upper Tanana Athabascan name, so there's a lot of dialects in the Athabascan language. So it refers to the large lake, which is called Tetlin Lake in English, but in their language it's Mancho. And it's obviously the villages are located right adjacent to the lake and very important subsistence lake for them. So in recognition of the lake and the importance to them, we're renamed the project to that. Fortunately, the project isn't really next to the lake. It's on the other side of their land holdings to the north, and everything that's related to the project basically drains to the north. So, we're pleased that none of the work we'll be doing around the project site will have any sort of direct or indirect impact on the Mancho, on the lake itself. And so it's a good setup for us. In terms of an update, we've accomplished a lot this year. We had a $19 million program. We're not quite finished, but all the drilling was completed earlier this summer. We've got all the assays back for the infill drilling. We're just finalizing QA/QC on those. Unfortunately, we don't have any results back yet for the exploration work that was done. We did about a $2 million exploration program, kind of right in and around the known deposit. And as you know, just to remind people, it's a 1.3 million ounce gold deposit, averaging about 4 grams. And this year's drilling effort was largely focused on infill drilling, further infill drilling to define a mineable resource, using the approach of basically an elevated cutoff, because we're going to be trucking the ore directly to the Fort Knox mill. No processing on site. We're not even going to actually crush the ore on site. We're going to do the crushing up at Fort Knox because their power is much cheaper there at Fort Knox rather than creating our own source of power at the Tetlin area. So that resource update probably won't be finalized until the end of the year. My guess is we probably would release an updated resource early next year. I'm actually getting together with our QP later this week to go over a plan and plan that out and get that in the works. But it will be at a higher grade, roughly the same number of ounces, and we're expecting that grade to come in around 6 grams per ton, rather than the current 4 grams per ton that's carried in the resource prior to this year's drilling. It's a pretty well drilled deposit, so when you kind of approach a project differently and look at it more as from a feasibility level of what you're actually going to be doing. And again, since we're not processing on site, we're not building a mill and we're not building a tailings facility, we're simply mining the ore and then loading it into highway trucks and trucking the ore up to Fort Knox and running it through their very large mill. Fort Knox, of course, has an 18 million ton a year mill with a lot of excess capacity. So we'll be running between 1 and 2 million tons of ore through their mill on an annual basis. So yeah, it's a pretty exciting time. We've got a lot of work done this year. In addition to the infill drilling, of course, we did a lot of metallurgical work, a lot of geotech, hydrology, condemnation work to make sure when we complete the feasibility study, we're not putting facilities on top of a potential ore body. So, and that kind of then dovetails into the exploration work that was done. As I said, we had about $2 million worth of exploration work done. Should have the results for those in another month or so. The labs are slow. Everybody, I think, worldwide is complaining about how slow the labs are. So we're not really alone in that area, but we're certainly anxious to see the exploration drill results, as well as, of course, the infill. But I don't think there'll be any surprises with the infill drilling. I think we'll pretty much see what we expect to see. But since we're using an elevated cutoff grade to accommodate the trucking the ore up to the mill, you'll be seeing more of a 6 gram head grade than a 4 gram head grade. But I think we've been guiding to that for quite a while now.
That's great. Thank you. And so there was a $10 million investment from the Alaska Permanent Fund. Can you tell me a little bit more about that?
Yeah, so the Alaska Permanent Fund obviously is a sovereign fund for the state of Alaska. It comes from a percentage of the oil revenues that are gained by the state as a result of the production on the North Slope. They have what they call formed the Alaska Future Fund. So it's a sub-fund underneath the Alaska Permanent Fund. And Permanent Fund is about an $83 billion fund, so it's a huge fund. They created a $200 million sub-fund called the Alaska Future Fund in partnership with Barings. And Barings actually is the portfolio manager of the fund. We're their first investment in the fund, and we're the only investment in the mining space. So they did a lot of due diligence on the company, on management, on the company, and on the asset, and before they would make an investment in the company. But we were pleased for them to come in for $10 million. This was about 4 months ago now. We did that financing at $21. I actually participated myself, bought 1 million shares at $21. So I've got obviously real skin in the game, and I really believe in what we're doing here. I think we've got a good shot at doubling our value over the course of the next 2-3 years as we move the Mancho project into production. And of course, we realize some of the other things that we're doing in the company, specifically with the acquisition of Lucky Shot and that. So very pleased to have the Alaska Permanent Fund and the Alaska Future Fund Barings involved with the company as a significant shareholder. So I think it's a good statement on the company.
Absolutely. Well, perfect segue into my next question. Can you tell us a bit more about the recently acquired Lucky Shot property?
Yeah, so this is a pretty exciting project. It's high grade. It's in the Willow Mining District. It's located right just about 40-50 miles outside of Anchorage. The communities, they're kind of called the bedroom communities of Anchorage, Wasilla, Palmer, Willow. There's probably about 100,000 people that live in what they call the valley out there. There's excellent road infrastructure. The borough maintains the road infrastructure right up to the mine site. It's kind of behind the first set of big mountains in the Talkeetna Mountains, so it's kind of out of sight, if you will. It was a historically producing mine. It produced about 250,000 ounces of gold with an average head grade of 40 grams, which is now just over 1.5 ounces per ton. So very high grade. Narrow vein mining. Average widths were between 1 and 2 meters. But very high grades. The district itself, there were probably 30 mines that operated here from the 1920s up until 1942, when the War Act shut down all non-essential mining in Alaska, and gold mining was considered non-essential. I think the only things that were considered essential would have been things like tungsten, iron ore, copper. So it was shut down in 1942, and there hasn't been any mining since then. There's only been a little bit of exploration on and off on the project in that long interim of time. It's close to 80 years now. So I think it's a pretty exciting exploration target, not just the Lucky Shot itself, but the extensions, obviously, to the Lucky Shot down dip, along strike, and in the rest of the district. We recently staked a big land package, probably doubled our land package in the area, and covering off some of the other historic mines that had been operating, sort of around the turn of the 20th century there. So we're excited to get back in there. We are finalizing our selection of our mine contractor as we speak. Expect to get them in, start to mobilize equipment probably in November, December timeframe, and hopefully be up and running and mining by January of next year, 2022. which is just around the corner. And we're also putting in a snow shed. Obviously, it snows in Alaska in the wintertime, and the front part of the mine, again, since it hasn't been operated for 80 years, we're going to put in some safety things with a snow shed that covers the first 60 feet of the underground tunnel, which is actually in overall pretty good shape. It hasn't, nobody's really been in there for 80 years, but we're going to refurbish that. The first thing the mine contractor is going to do is refurbish the existing underground workings, and then extend them another 70 feet or so, and then advance them another 800 feet, get into the footwall of the vein, drift parallel for about 1,500 feet in the vein, and then just drill the heck out of it. First from the footwall side, then we'll cut across the vein, take a bulk sample of the vein as we cut across, and then drill it again from the hangwall side. So between those two panels, we should outline, again, assuming the geology is continuous, which we've got there's about 173 drill holes that say it is continuous. We'll get underground and demonstrate that it's continuous. And our objective is to outline about 500,000 ounces of ore there in the 20 to 30 gram range. That would be our expectation on grade. So exciting time, and that'll be our second project. And again, something that has great infrastructure. Rough numbers, we think that's going to cost in the neighborhood of $15 million to accomplish in the next year and a half. So we're excited to see that project quickly being advanced forward.
Great, yeah, sounds very exciting. Contango Ore also has 4 other projects. Can you give us an update on those as well?
You bet. Yeah, so we've got, I'll start with Shamrock. We recently staked that property. Maybe I'll just kind of advance to the very end of my slide presentation here. So here's a map that shows our other projects. We have Shamrock, which we recently staked. It was open land, kind of a bit surprising that we could find open land in the right around the Pogo mine, which is a mine that's operated by Northern Star. It produces in the neighborhood of 300,000 ounces of gold a year. That's what they're projected to do, I think, this year. So this is right next to the road. It's a historically alluvial mining district with a fair bit of information that we've been able to put together from previous operators. Core Mining acquired a junior company called Northern Empire for a project that Northern Empire had in Nevada. And so this was a non-core project to Core Mining, and they dropped the claims. We picked them up, and then we bought the data from them that Northern Empire and others had put together over the years. So we've got quite a database of geochemistry, geophysics, and geology. And this map shows the work that we accomplished this summer. We focused in on 2 areas, the one up the north called Hilltop, and the one down at the south called Banner Dikes. And we did a big geochem program. We're just finalizing results. We'll probably have a press release updating results on that. But we've got 2 nice targets developing here on both these targets at Hilltop to the north there and at the Banner Ridge to the south. Our next project I'll talk about just briefly is the Eagle Hona. Very large land position immediately north and north and west of the Mancho deposit, with some of the same stratigraphy running up a long trend there. We had done previously, back in 2018-19, we had done a lot of geochemistry up here, and there have been some historic drilling as well. And we were basically following up on all the hot colors here, the hot pink colors of over a gram gold in stream sediment and pan concentrate samples. So we did a lot of sampling this year, as you can see on this map, a lot of follow-up sampling, and we're just finalizing results for that work now. And again, we'll be planning subsequent work next year, follow-up geochemistry and surface work. You did some trenching in areas, very steep country. It's not all like Tetlin, which is just across the Togue River. Tetlin area is all kind of rolling hills. This is steep mountainous country, so little slower going to, and obviously safety is a factor here. So, but we carried out the entire program in good stead. The last project is called Triple Z. It's actually to the northeast, and it's right at the junction of the Taylor Highway that goes up to the northeast there, and then the Alaska Highway that goes up between Fairbanks and Whitehorse. And that's a well-defined porphyry copper gold target. Good soil geochemistry, anomalous copper, and anomalous gold, coincident with a very strong IP anomaly. So we are waiting for a land transfer to be completed between the federal government and the state of Alaska. It's been rather slow going. I think the change of administration always slows things down. But they have completed all the survey work, and that work is just being reviewed and accepted by all the affected parties. And so we're hopeful that that'll get done over the course of the winter months here, and then we'll be able to drill that good quality target next year. So those are our early stage projects. Again, you can see where Lucky Shot is located there. Again, just great infrastructure. So I think we got a nice portfolio of projects developing in the company, and I think we're well positioned. We're well financed with $29 million in the bank. So I think we're in a great position to start seeing our exploration projects, specifically Mancho, turn into an operating mine, and I think Lucky Shot will be not too far behind it.
Great, thank you so much for the update on the other projects. In Contango Ore's year-end results, you booked $24 million net income and reported $35 million cash balance. What are the anticipated plans with the money?
Yeah, so basically it's to advance these projects. Of course, our flagship project right now is Mancho. We expect we're pretty much wrapped up with all the work this year. There'll be, the last cash call I think was a week or so ago. So our balance going forward is, probably in the $27 million range. We're expecting to start construction on the Mancho project next summer, and so I'm expecting a pretty significant budget there, and obviously we're starting to build things. I think people will know and understand that we're actually both ourselves and Kinross are pretty serious about getting this thing into production as quickly as possible. So that's where a good part of the money goes. And the next one we'll be spending a fair bit of time and dollars on is Lucky Shot. As I mentioned, we're the mining contractor. We're expecting that mining contractor to be selected in the next week or so here, and then for them to start mobilizing and getting going underground. We'll probably be somewhere in the fall time before we get to the place where we actually are in place to be able to drill and detail the vein underground. And obviously that we'll spend in the neighborhood of $15 million over the next 18 months to 2 years drilling out that ore body, and then obviously working on a plan to start developing that ore body into a producing mine. So that'll be the next two big focus of the company and where the dollars are going to be spent. I'm expecting us to be drilling at Shamrock next year, and Eagle Hona will expect some ground follow-up work, and hopefully if the land is transferred, that land transfer is completed at Triple Z, we could see maybe $1 million program out there drilling this high-quality porphyry copper gold target there.
All right, thank you. So my last question here before we're going to open the floor up to the attendee questions, but can you share the progress of the uplist to the NYSE?
Yeah, I'm pleased to report that actually we filed our application and expect a 2 to 3 week turnaround with the SEC. It's called an S3 filing, prospectus filing. It gives us a lot of flexibility going forward, and certainly expecting to get uplisted on the American Stock Exchange with that, and getting more liquidity into the stock. I think we all know this has been a sort of a friends and family finance company in the past, and I think one of the biggest knocks on the company is it's very hard to buy the stock because there just aren't very many shares available for sale and for trade. So getting uplisted on the NYSE American will do that. All the other companies we put together, Nova Gold, Trilogy, and Alexico, they all trade. They're dual listed and trade both in Canada and the U.S. Contango, of course, is only U.S. listed. So getting that NYSE American listing, I think, will open up the company to a much broader group of potential shareholders and investors. So I'm very excited to see that hopefully here in the month of November.
That's great. Thank you so much, Rick, for the update. And now we're going to go into the attendee questions. So if you do have a question, please feel free to submit them now. Great. Thank you so much. So we do have a bunch of questions here already. Question from Kyle. Could you please provide some high-level estimates on what you believe are the all-in sustaining costs for the Lucky Shot mine and also the capital costs?
Yeah, it's a bit early to start predicting capital costs and operating costs. This is really an exploration project still. Lucky Shot hasn't been a mine since 1942, so I'd be very hesitant to try to put any sort of guidance out at this point. What I can say is we've selected the contractor. Atkinson has been selected as the mining contractor. They were up on site yesterday, getting organized to get their equipment mobilized up between now and the holidays. And they then would plan to get underground first of right after the New Year's break, and their schedule has us in a position to be able to drill in July of this year. So a little ahead of where we had, I think, the guidance that I'd given earlier. So I think and then once we start in July drilling. 3-month drill program on that first drift in the footwall. Then at the same time, we'd be advancing through the vein, getting into the hang wall, putting a 500-meter drift along parallel to the vein and from the hang wall and drilling that. Once we get that outlined and we've got those 2 steps done in the next, call it 18 months, I think then we can start talking about how much additional capital. And how much what we think our operating costs would be. So give us a year or two, 18 months or so, and I think we can probably give you good guidance on that. It is a high grade deposit, so we always know grade is king in our business. So that historic 40 grams, I'm sure we'll be using a lower grade cutoff than they used back in 1942, but it's still a high quality narrow vein mining project. So. We'll be able to update in 18 months or so.
All right, thank you. Mark is asking, does the move from 4 grams to 6 grams change the overall resource size?
Short answer is no, and that's actually amazing because typically when you use an elevated cutoff, you definitely lose ounces. We're going to lose a few ounces, but not very many. As I mentioned, we'll put out a resource estimate in conjunction with the feasibility study and some guidance. Was just talking with the folks at Kinross, and I suspect that's not going to be until the end of their quarter, so like March timeframe. I was hoping to be able to get that out a little sooner, but it might, in order to be able to call it a reserve, which is what we kind of like to do. We've got to wait for some more guidance on the feasibility study. So there's still once that's out, we'll turn it into a SK 1300 report. But the guidance that that Kinross is giving is to that 6 gram delivered grade, and certainly the infill drilling demonstrated that the continuity at that elevated cutoff was there, and that was sort of the good news that came out of all that drilling.
Great, thank you. Ellis is asking, where will you mill the ore from Lucky Shot?
Not determined yet. We when we acquired the Lucky Shot project, there was included a mill building. It's in the photographs in our corporate presentations. It's a nice mill building. It's right along the Parks Highway, just north of the small town of Willow. That's a potential site. It was fully permitted for processing by the former owners, so long as they didn't use cyanide for a gravity only separation process. So that's something we'll take a look at. But again, it's a bit early to try and decide where we're going to mill. Got to find the ore body first. When it was shut down, they had mined 250,000 ounces, but it's typical in those days. They didn't really have a lot of resources carried forward. So that's the objective over the next 18 months. So yeah, we'll leave it at that for right now.
Okay, thank you. Kurt is asking, can you speak to the exploration potential outside of the current underground targets?
Yeah, so there were 30 operating mines in this district in 1942, and it was shut down. And they were none of these were huge mines. There was one other large mine, the Independence mine, and then the Lucky Shot were the two largest by far. These were quartz veins at surface. The miners would go in, they'd mine the quartz vein, they'd stay on their quartz vein, and probably send it to one or three of the operating mills that had been established there. Of course, there was one right at Lucky Shot. So there are lots of what I would call prospects of high-grade quartz veins right on the surface that we'll eventually take a look at. We're going to focus right now right on Lucky Shot and the down dip extension of Lucky Shot. We know the Coleman has a 120,000 ounce resource that was drilled out by the former operators at Full Metal. That was back in the early 2000s. And then what's interesting to me geologically is all of these historic mines that did produce back to 19 teens to 1942. They were hosted in the granodiorite. There are a number of prospects in the adjacent Hatcher Pass schist, and they were all too low grade to be mined mines back in the early 1900s time frame. They were described as stockworks and vein zones and disseminated zones. Those might be really interesting prospects to go take a look at from a modern mining standpoint. We've got a great model in Alaska with the Pogo mine, hosted in schists. Very similar overall geology, deep-seated intrusions into schist and gneiss terrain. That's exactly what we have in the Lucky Shot or in the Willow District. So I think there's lots of targets to take a look at there. That's why we consolidated the land position and basically doubled the size of the claim blocks there. There are other claim owners in the district, and certainly over time we'll have discussions with them and see if we can convince them to let us explore the projects, and we'll obviously be selective about what we end up doing. But again, the focus right now is going to be right at Lucky Shot.
Got it, thank you. So we talked a bit about the New York Stock Exchange listing, but Kyle is asking whether there'll be an equity financing associated with it.
So I just got an update. In fact, I've been emailing this morning a little bit. We should be up and trading on the 23rd of November is what I'm told. Now, that's the day before U.S. Thanksgiving, so I won't be surprised if there's maybe some glitch or something, and it may not be till the following week. But we've basically been working closely with the exchange. So there won't be, there's no requirement to do a financing to be uplisted. So I think that's an interesting development or recent development. We do, and as I've said before, we've been kind of a friends and family company with not a lot of shares available for trading. I think our shareholders are actually pretty happy with where the company is going. So we will be opportunistic about doing a financing, I'd say over the next couple of months. Gold price has been a little lukewarm, I'd say, for investor appetite. This time of year generally isn't the best time to look at financing, but we can certainly be opportunistic. Gold's moved above that 1830 level, which I think was good to see that move, but it seems to be kind of stuck at the 1850, 1860 level. So, We've got $25 million in the bank, so we're not pressed for capital. We're certainly going to spend dollars over the next 2 years executing our plan at Mancho and at Lucky Shot. So we definitely will be looking to raise additional equity, but we'll certainly be opportunistic about picking the timing when we do that.
Okay. With the listing, Jeff has a question. I just lost it, so I think maybe it's already been answered. Our next question is in your opinion, what is the mine life extension probabilities in Mancho?
I think Mancho's got excellent opportunity to find additional resources. We can look at the geochem slide. It's in our presentation. There's substantial amount of geochemistry, soil geochemistry, and geophysical data that's been collected over the course of the last 5-6 years, and lots of targets left to drill right around the Chief Dan, what we call the Chief Danny area, which is sort of a roughly 5-mile area of interest right around the known deposits there. And that only represents, 7 or 8% of the total land package that is under control through the Tetland lease. So we've got a lot of work to do over the time. The focus right now, of course, is going to be getting the plus million ounces that are there into production, generating cash flow, and the secondary standpoint will be, my guess is we'll have sort of $3 to $5 million exploration programs probably going forward from including next year and going forward from there. So definitely lots of opportunity to expand the 5-year mine life, the current plus or minus 5-year mine life.
Got it. Thank you. Brian's asking, do you believe that Contango ore will get sell-side equity research coverage once getting uplisted?
Yeah, absolutely. There's not a lot of companies out there that have that are development stage companies that have a 2-year time frame to get into production and generating cash flow. So there is definitely lots of interest from the analytical side, and of course, when we talk about doing a financing, that obviously gets all the bankers' attention. So again, I will be opportunistic about that, but I do expect to get a significant amount of coverage from the bankers in the mining space. It'd be a pretty unique story to a company with far less than 10 million shares outstanding and generating plus $50 million of free cash flow.
Absolutely. Dan is asking, how do you think about the risk of fuel costs to truck ore 250 miles from Mancho to Fort Knox?
Yeah, certainly we're seeing that's a great question, and we're seeing inflationary pressures that even the Federal Reserve is admitting now that inflation might be a little more than transitory. And I'd say, from our capital cost side, I think we're pretty well protected. The $130 million estimate that Kinross put out as guidance. I think there's not a lot. We're not building a lot of so we don't have a lot of steel and a lot of cement that is subject to inflationary pressures. So I think our capital side is good. I think Kyle's question is a good one on trucking. We certainly are exposed to increased fuel prices, and we've already seen increased fuel prices. I think they're at the range where Kinross's $750 guidance, all-in sustaining cost guidance that they put out in Q2 in late June, I think it was, incorporated a part of that increase in fuel costs from, say, a year or two ago. But I think it's certainly an area that we should pay close attention to, and that we should spend time on looking how do we maximize or minimize the amount of fuel we're using. How do we maximize the efficiency of the operation? It is the biggest single cost center for our project. Just kind of rough numbers, to truck the ore up to the Fort Knox mill, the 250 miles, it's about $75 a ton. Mining is about $25 a ton when you consider the strip ratio, and processing is in the neighborhood of $25 a ton. So it's the big cost center, and it's probably the one that we should pay the most attention to. So I think Kyle brings up a great point.
Great, thank you. Kevin is asking, what do you see your future engineering needs may be, and how can firms get information to you to assist in this need?
Well, sure. Reach out to me or up on the corporate slide here, the info@contangoor.com. We'll certainly respond to you. Obviously, Lucky Shot, Mancho is in the hands of Kinross, and they're managing the feasibility study and all that's associated with that. Obviously, Lucky Shot's 100% ours, so that's on us. Again, we're exploring it right now, so we've got our mining contractor selected. We haven't selected a drill contractor yet, so if there's a drill contractor out there that likes to do underground drilling, please do reach out to the info@contangoor.com. We'll probably be wanting to select that and get that lined up early next year. I'm pretty sure drill rigs are going to be at a premium like they were this year. Use the info@Contango and we'll certainly get back to you.
Great, absolutely. Kevin's next question is, I don't know if I understand it, but has there been any thoughts on rail?
Rail for Mancho?
Yeah, I think.
Yeah. Short answer is no. I mean, it's a small high grade mine. So the cost of rail is in the neighborhood of $10 million a mile, and you'd have to put in 100 plus miles of rail. So short answer is no, not at all. The trucking works well. The capacity of the highway is sufficient to handle the truck traffic. There were a lot more trucks driving up the road when the pipeline was built, and the road was nowhere near as good a road as it is today.
Great, thank you. So was the $3 to $5 million annual exploration budget per year going forward at Mancho Project for Contango Ores 30% interest or 100% basis?
Yep. Yeah, that's a good question. That's 100%, just to clarify. So our share would be 30% of that. So
great, thank you for the clarification.
$1 to $2 million for us.
Okay. Kurt's asking, given your experience in more remote parts of Alaska, how does the infrastructure at your current project affect future economics?
Yeah, that's a great question. I mean, Alaska is always, everybody comes to Alaska with big ideas and big dreams, and they're going to go find the next Donlin Creek, 40 million ounce gold deposit. We actually did find Donlin, and it's 25 years later, and it's still not permitted, and no decision in sight to build it, which is disappointing me personally because I still own a fair bit of number of shares of NovaGold. But I guess as I've grown up a little more here and want to look at cash flow, I'm going to stick to the road system. I think we've got a lot of opportunity in Alaska right around the road system. We have a hungry mill at Fort Knox. It's an 18 million ton a year mill, and Fort Knox has been running about 9 million tons a year, so it's half empty. Obviously, we'll put 1 to 2 million tons of Mancho ore through it with the Peak Gold joint venture. So that's part way there. They've added Gill to the mix, which is about 10 miles away from Fort Knox. So I think there's a good strategy to pursue there, and if we happen to find something 5 million ounce gold deposit that can support its own mill, well, that's fine too. Obviously, drilling next to a road system is a lot more efficient and effective than drilling out in the middle of nowhere where you have to establish camp and everything's fly in. Helicopters are not cheap. So yeah, I like the road system, and there's lots of things around the road system that we can take a look at. So that's where we're going to stay focused, I think.
Thank you. In closing here, what is the focus after Mancho and Lucky Shot project? Are you going to focus on the existing properties? And if yes, which one? Or will there be another acquisition?
Well, we're always looking at new opportunities. We've got our our 3 early stage projects. We'll advance those. But we haven't found anything that looks like a mine yet. But I'm talking specifically about those 3 projects. Lucky Shot, I think, has a really excellent opportunity to become the second operating mine in the portfolio. So yeah, I think there's a number of things in Alaska that might provide opportunities for us, and we're not restricted to just working in Alaska. We happen to know it really well, but I spent well over 10 years working in Nevada and in Western U.S. and Arizona. Went to school in Arizona, so know that part of the world pretty well as well. Don't have any plans to go to what I call the funky places. I used to work for Placer Dome in all the funky places in Africa and Central Asia. I had a great time working there, but I wouldn't invest a nickel of my own money there. So I'm not going to take Contango or shareholders' money there. We'll work in nice, friendly places where you wouldn't mind going on vacation.
Great. All right. Well, thank you so much, Rick, for taking us through a company update in this discussion and also the live Q&A. And thank you to everyone who joined and asked all these great questions. As Rick said, if you do have another question or want to contact Contango Ore, the information is on the slide right here, so feel free to do so. And also there's more information at their website, contangoore.com. And this has been recorded and will be available to watch again on 6.com. So it will be uploaded shortly. But before we close out, I'll just pass it back to you, Rick, if you have any final words.
Well, thanks, Dash. And if you have questions that we didn't get to, please don't hesitate to just send them here to info@Contango Ore. I'll certainly get back to you. And look for our uplisting to the NYSE. I think that'll be a pretty significant milestone, and continued updates on our Lucky Shot and Mancho projects. A lot of activity is going to happen in 2022, so I'm pretty excited.